I'm Joachim Nahem. I'm the CEO of Position Green. We are a leading software and advisory provider on ESG, pure play. We have a footprint in the Nordic region. We work globally on ESG advisory and software, both narrow and broad. We work with corporates, we work with investors on trying to really focus on what is happening right now on ESG when it comes to strategy, when it comes to reporting. And I'll speak a little bit more about that later. But essentially, we're 200 people who sit across our offices in the US, the Nordic region, and UK. And we work with about 500 plus customers from a diverse set of industries on the corporate and on the investor side.
Excellent. Thanks, Joachim. Let's dive into some of those questions. You talked about sort of some of the ESG issues driving it. So why don't we start there? What are you seeing in terms of the key regulatory changes that are sort of driving the uptake of your solutions as such?
Yeah. So it's being referred to as at least in the European context, a tsunami of ESG regulations. And like with most EU regulations, it has a lot of acronyms and there's a lot of complexity and unpacking that is needed. What makes the ESG space or ESG regulation a little bit unique is that this is in many ways the first wave of regulations, because it can't be compared with anything that we have or that's been done before more softly on environmental or on even human rights, social aspects. This is a set of new and very complex regulations which applies to both corporates and investors. And the objective here of the regulation, I think, is twofold. One is to make sure that we have a unified, at least in the European region, focused on what is essential for their green transition. So basically to make sure that the EU reaches its targets on the transition to a cleaner and a more climate-friendly business and society. It is demanding that businesses disclose critical information on climate, on environment, and on people. And there are some overarching regulations here, which including what's called CSRD, which again has something called ESRS. Sorry, there are a lot of acronyms, as I said. And there's the EU taxonomy. We can speak and unpack a little bit these later in the conversation. But essentially, these are driving a tsunami of disclosures from businesses, where you have to, for example, provide climate accounting. You have to say something about the footprint of your business. And because businesses, again, make up a large part of the portfolios, if you like, of asset managers, whether publicly trading asset managers or private equity, they are reliant on businesses. And we're talking about 50,000 businesses in the EU, which will be required to provide or disclose information on, especially on environmental, on climate disclosures. So this is driving, obviously, a lot of activity when it comes to both investors and businesses just to comply and disclose here. So this is sort of one key objective. The other, obviously, is to nudge and to sort of, this is where we distinguish between ESG, what we call ESG transparency, and then sustainability impact. So on the first side of the regulatory requirement, simply just to put this information out there. What are your emissions? What is the climate risk of your business? The other is to change your business model and basically change, your services and products to become greener or more, at least socially acceptable. And it requires, a focus also on supply chains and human rights. And this is sort of what, especially the EU taxonomy is trying to do, is change our economies in a way that they are basically producing goods and services that give us, are aligned with the Paris Agreement and take us to a net zero.
Interesting. So the first wave as such is really work out what the impact is. The second wave as such is to do something about it.
Yeah, and they run parallel to a certain degree. So the EU taxonomy is already in force, and the EU taxonomy is a pretty revolutionary idea, actually, because it's saying that you have to account for your revenue in a green bucket and a non-green bucket. So you have to be able to, as a business, to say how much of your revenue can be classified as green according to the EU taxonomy and which is not. And we're looking at CapEx and OpEx, and it's basically comes down to the CFO and the treasury, if you like, to say what is green and what is not, and putting this out there, disclosing this information like you would do on your financial data.
Gotcha. And you mentioned, this is impacting 50,000 companies in Europe, I think was the number. Do you see that as, again, that sort of first wave piece? It's starting with the 50, but the expectation is actually that comes and captures a much larger audience of businesses in the next 5 to 10 years?
Exactly. So there's a direct and indirect requirement here in that it's staggered, meaning it starts with larger corporations. It's defined a little bit differently in different European markets, but it starts with the larger ones and then it works its way down to medium-sized or SMEs. The thing is that it has a knock-on effect because the large ones have obviously suppliers where they need the information from these suppliers. They may be SMEs, they may be in the European market, they may be outside the market. So in effect, this is really having a much bigger impact than just the 10,000 or 50,000 that may be from a legal perspective required to disclose here, because there's also the customer aspect here, and that to win contracts, to be a customer, you are required to provide this information. And this is also what is a big change here, is that we're moving from nice to have to must have on these ESG regulations. Many companies already have most of this in place because the nice to have was actually a must have to be a customer or a supplier. But from a regulatory perspective now, you have to have this. And what we're also seeing is that investors, to be investable, if you like, either from private equity or from an asset manager, you have to have this information and disclose it. So the number in practice de facto is probably much larger than what is legally required when we say 10 or 50,000 companies that are encompassed by this regulation.
Tip of the iceberg as such, and then obviously the bulk's below the water. When you think about, and you've mentioned the complexity in the regulation, and you think a little bit around globalization, even I suppose, even within Europe versus the broader globe, how do the diverging sort of regulatory requirements in those different regions sort of impact you? And how, look, even within Europe, it doesn't sound like it's always the same within every country. So how does that sort of impact you and your solutions?
Yeah. So what we're seeing is there's obviously overlap, but then there's some differences. And because we're talking about more granular reporting here, these differences also matter. So to be compliant with what is essentially the ESG regulation in the UK market versus the EU, and then versus the US, which is a little bit of a separate story, which we'll get back to. And the SEC is going to weigh in this month on what if there are going to be requirements for publicly traded companies in the US market. But we're seeing obviously quite a lot of overlap. Take climate accounting. So you have what's called scope 1, your direct emissions as a company, that comes from your own operations. You have what are scope 2, your use of energy in your own operations. And then scope 3, which is a more complex but increasingly important and regulated aspect of emissions, which is your value chain, basically your suppliers, where your products and services go, that you own your footprint, your impact, if you like, broader than just your own operations. So these 3 emission scopes are under what we call GHG protocol. These are recurring in most jurisdictions and most markets, that you basically have to have good climate accounting. But then you have something like climate risk, or what you have with the EU taxonomy in terms of what they actually then classify as green. That's slightly different. So, the UK has a very similar, but slightly different taxonomy or idea on how this should be reported. And then you have markets, for example, outside the OECD, or you have even Australia here that has its own regulation on human rights. And then you have even Hong Kong and China are sort of weighing in also on what is required. So I would say there's about 80 to 90% overlap. But even when there's sort of a 10% or 5% divergence, when it comes to solutions, you need to be able to comply with these in your local market. And this is obviously a little bit of a headache for investors and companies. And I think for advisors and others, it is an opportunity. But when it comes to the solutions on the software side, what we're trying to do here is be able to comply with the regulations, but also customize. So this sort of customization versus more universal requirements is key in the ESG space, because we do think customization and individualizing it is still important, both for regulatory perspectives, but also what we call material aspects. What is actually material to your company and to your customers and your stakeholders?
What are you seeing then around sort of clients? Are they mostly prioritizing that sort of one-stop shop enterprise, best of suite approach? Or are you seeing a decent amount who are saying, actually, no, what I want is sort of point solutions, best of breed, and then I'm going to try and stitch this all together so I have an in-house, or, so I end up with a suite?
We think eventually that a suite in many ways makes sense, because there's overlap of data here. If you have too many solutions, it's going to be too cumbersome, because you essentially have to, from the ESG reporting perspective, you have to gather different information, different data points, whether it's on the social, environmental, climate, or governance side. But it has to be aggregated into essentially a pretty broad framework. So if you look at the EU regulation now on CSRD or ESRS, it has, for example, ESRS has 90 plus, even though it, again, hasn't been decided entirely, it has 90 plus disclosures, which span across environmental, social, and governance aspects. It has some very qualitative things on, for example, what's called double materiality. What is material to your company, but what is also material to society and climate. So it doesn't really care about your bottom line, and at the same time has to be material to your bottom line. It's complex. So trying to sort of capture all of this, we think, yes, there are definitely solutions, and there will be sort of best practice solutions here, but it has to come together as a system in the same way that your financial regulation has to pull information from different sources, but has a sort of overarching requirement when it comes to regulation.
Which probably leads me into that sort of next, what situations have you sort of seen pure software versus more of a tech-enabled services solution be more effective in addressing, clients' needs, sort of vice versa? But great to sort of hear your views on, new client turns up, what's the typical approach that's being taken with them?
So this was actually the rationale for how we created or merged into Position Green. So my background is from advisory, from consulting. I spent 15 years with the UN. Then I spent 6 years working with corporates and investors on ESG reporting and strategy. And we quickly discovered that, we were doing manual reporting. And there's still many companies who do this in Excel sheets or gathering things from different sources and sort of putting it together a little bit hodgepodge on reporting according to a standard or framework. And we discovered quite quickly that there has to be, some kind of software solution here, or that the future is software. At the same time, having spoken to many software providers and executives, we were seeing that this is moving so quickly, it's so dynamic. So there is no sort of software solution today that is going to be the right one tomorrow. It requires real expertise and actually advisory insights to be able to have the right software solution. And that, there is still going to be a fair amount of customization and sort of more tech-enabled rather than just pure software that is sort of plug and play ready and gives you, like we spoke about, climate accounting or climate risk disclosures. So the whole rationale for creating Position Green was to take the best software out there and the best advisors. Put that together, we believe that is going to be the sort of superior solution for the customer, because it still requires a qualitative and an expert understanding to help guide the customer, whether it's a corporate or an investor. At the same time, where it becomes more clarified and good practice emerges, we can obviously create more of a software plug-and-play solution, but it's going to be gradual. And we're very skeptical to those who say, we have an AI solution or it's just plug and play. Not the case. We've done thousands of reports, literally thousands of sustainability reports, and we know it's a mix of, and it is, I would say the good news is that we're moving more towards standardization, both on regulation and frameworks, and in terms of what is required. But there is still a qualitative aspect here. So this is where we think both tech-enabled and software solutions is the way to do it. And this is essentially what we are doing as a company, having these conversations between our product, our software developers, and our ESG experts who work with hundreds of companies every day.
Interesting. And to the extent you're comfortable, and when you look at your roadmap going forward and you're thinking about solutions and where that might take you, what are some of the things that you see on that sort of midterm, longer term horizon from a Position Green perspective?
Yeah. So we have something called One Step Ahead of the Curve group, and we meet every month. And it is basically, as I said, we have our chief product officer, we have our more of our solutions and software people, and then we have our ESG experts, both broadly, but then also specifically on human rights, on climate, on ES and G topics. And we meet there, and also on regulatory affairs, of course, and we say, we anticipate what is the next step, what's happening, both from a customer perspective, from a regulatory perspective, and again, market by market. Are there other things that are driving this in terms of what the solution will look like? So we want, and we meet literally on a monthly basis because it's moving so fast. Some of these regulations have been announced, but they're not entirely set yet. So for example, ESRS, we know is coming. It's a huge one, but we have to wait until June till the finer details are there. The EU taxonomy has been launched, but they have not essentially finished the taxonomy of the economy. They've only done about 60 or 70% of industries and the economy have been classified. So this is sort of dynamic. So it requires that we have these constant conversations between our software developers and the experts, who again are infused by customers. So we have our customer success team, which speaking to 500 customers. What are they saying? What are the lessons learned there? How is this actually working in practice when you have a regulation or a requirement and you have to do it? What do we learn from that? So these type of insights and discussions is what's really driving our solution development. And it's very dynamic.
Yeah,
it's complex. And it can be a little bit stressful, but we think, this is the way to do it. And this is what's going to make our solutions the best solutions, that we continue to have these conversations. Because I think there are too many out there, both on the expert side and on the software side, who say, well, we're done. We have the solution. Yeah, we know that this is dynamic and you need to keep investing in that. So our biggest, investment here is in these solutions, that they continue to be up to date.
It's really interesting. And are you finding, when you talk about sort of, obviously your experts, your software developers, the customers, all in that conversation, how about the regulator? Like, are you seeing interaction? Are you getting interaction with the regulator, or are they sort of sitting, separate from all of this, or are they getting in the dialogue with you guys and your clients?
I think, the regulators here are struggling on the one hand that there's a lot of pressure to regulate. There is also now more recently the fear of greenwashing is driving a lot of the regulation. And we had this incident last year, where German police raided a bank, DWS, for essentially selling products that were labeled as an asset manager as green, and they were not green. So we saw these type of raids that you would normally associate with corruption or with some very serious governance issue. Yeah. So this has obviously put, I think, a fear in a lot of companies and investors also, that you need to take this more seriously. At the same time, regulators need to get this balance right, because if you over-regulate it and make it too complex, which we're seeing some tendencies in the EU that it's too complex. For example, the EU taxonomy. We've sat with customers now, what was supposed to be a 3-week assignment is turning into a 1-year, 2-year assignment. Wow. To try to actually understand at the granular level, what does this mean? Accounting for each dollar, whether green or not, it's extremely complex. And I think it's also too resource intensive for some of the smaller companies to be able to comply with this. So there is that problem of complexity. And then also on the sort of greenwashing side, you don't want to regulate it too hard that you basically don't create any incentives to invest in something that is green. And in the private equity space, for example, or what's called under SFDR, Article 8 and Article 9. These are essentially if you're allowed to call your funds green or not green. We're seeing that there is a certain fear and a pullback now from funds that were perhaps more ambitious of saying that we're just going to invest in impact. So Article 9, they're actually pulling back now because they're afraid to be called out for greenwashing. So you're sort of getting what we're calling green hushing as well, things that are probably green, that are good, but you're afraid to speak of it. And the regulators are sort of making it too dangerous to sort of go into this space, that you're not getting the investments needed into what is actually sustainable. So I think regulators are struggling with it. They are, to a certain degree, listening, but at the same time, we're very early in this space of having iterations and basically feedback from the market players on whether this works or not.
What's working, what's not. Well, look, Joachim, I wanted to thank you today for taking time to participate in the GRC showcase that we're running. It's been a real pleasure to host you. Great to hear your views and learn a little bit more about Position Green. So again, thank you for your participation.
Likewise. Thank you for having me.